Around 90% of traders lose money, and almost all of them hear one explanation: they lack discipline. But the people failing are not the lazy ones. I know because I once placed 71 trades in 3 months and watched my account fall to $20. I was sure I needed more willpower. I didn't. The trades were lost before I clicked. So I'm going to show you the 3 choices that decide a trade before it starts, and why your losing streak is something you can finally point at. There is something strange about the traders who lose the most. They are usually the busiest ones, while the people calmly stacking profits look like they are barely trading at all. Charlie Munger spent decades as one of the most successful investors, and most of that time he did almost nothing. He sat on piles of cash, sometimes for years, refusing to act until something was clearly worth it. He used to say the real money was made in the waiting. He was not fighting the urge with willpower. He had set his frequency so low that the urge had nothing to grab. Most traders do the opposite, quietly treating a busy week as a good week, then hunting for reasons to click. So you take the Tuesday night trade that doesn't quite fit so that the evening doesn't feel wasted. The trade has a name. It's a filler trade, a trade you take to fill an empty slot in your week, rather than because the market earned it. And a filler trade is a coin flip you paid for. This is where the first candle verdict begins, because the more often you click, the more of your account is riding on trades that were never good enough to begin with. Here's the number that changed everything for me. I went from 71 trades in 3 months, blowing up my account, to about 21 trades in a whole year. And that one change did more for my account than any indicator ever did. And every extra trade you take is quietly someone else's payday. The spread is your broker's cut, and your boredom is their business model. So you cut back. You wait for only the clean setups, and you can still bleed out because the few trades you do take are sized to lose before they even start. You can take the exact same setup with the same rules on the same chart and lose. Then change one number and that same trade wins, and it has nothing to do with how the trade looked. And the reason that one number matters so much was proven of all places by a group of economists paying villagers to play games. In rural India, they handed people simple games that needed focus and a clear head, then offered different rewards for doing well. Some could earn a day's pay, some could earn 2 weeks, and one group could earn around 5 months' wages from a single afternoon. You would expect the people playing for 5 months' pay to try the hardest and win the most. They came dead last. The bigger the reward got, the more it scrambled their thinking. The moment the stake grew big enough to truly matter, their minds stopped working properly at exactly the moment they needed them the most. And that's you at 11 at night, staring at a position so big you can't look away, refreshing the screen, working out what it costs you if it's wrong. A position that big has a name. I call it a loud trade because it won't go quiet. A correctly sized trade is silent. You place it, close the laptop, and forget it exists. A loud trade follows you around the house. And here's the sign that costs nothing to check. If you feel the pull to look at a trade before it's done, the trade size already made the decision for you, long before your analysis got a vote. This is the second choice that sets the first candle verdict, and it shows up differently in every account, which is exactly what the free diagnostic quiz in the description is for, naming the one leak draining yours. Get your diagnosis today with the link below. I don't size a trade by how confident I feel anymore. Confidence has never once moved my stop loss to a safer place. A loud trade makes the decision before you do. So you trade less and you size it small. You would think that's the account finally safe. Then a setup appears that some part of you already distrusts, and the rule you never actually wrote down does nothing to stop your hand. You can know your rules perfectly. You can recite them in your sleep and still break the most important one at the exact moment that it counts. Back in December 2021, I took a trade in oil that didn't really go anywhere. It scraped a tiny profit and fizzled out, well short of my take profit. Then, a day or two later, oil set up again, the same direction, and I felt that little pull to get straight back in. And somewhere in the back of my mind was a quiet voice. A market that only limps to a weak result the first time might be turning. So stacking a second trade on top was asking for trouble. But that voice was only a feeling. It was not written anywhere. It was just a thought competing with a dozen others. So I took the trade. And that one was a clean loss. 2 trades in the same market, back to back, and the second one was completely avoidable. That second loss is one of the reasons I have the rule today. The one that now sits in my plan in plain words. If a trade limps in well short of target, I don't pile a second one in behind it. My instinct was right. It was just a feeling I had never written down. That's the third choice, the unwritten rule, and the last piece of the first candle verdict. A rule that lives only as a feeling in your head is a suggestion. And a suggestion is the first thing to go the moment a trade tempts you. If your rules aren't somewhere your eyes actually land before you click, they don't exist on the day that it counts. And the day it counts is always the one that costs the most. When all 3 line up, trading gets quiet. The urge to check is gone, and there is no rule left to forget. You place the trade and close the laptop, and you genuinely do not think about it again. You don't have a discipline problem. You have a structure problem wearing a discipline costume, and the losing streak you spent years blaming yourself for was built. Now you can finally see the blueprint. But even when you size small on a small account, the broker's minimum trade size forces you to risk far more than you choose. And no discipline touches that math. So watch this video next, where I show you the exact account size the 1% rule actually needs. So see you in that video.